Howdy, y'all. Welcome back. It's the weekly economic update for Monday, March 28th, 2022. I hope everyone had a fantastic weekend. Mine was pretty good. Cougars did not win on Saturday, which kind of a sad thing. You know, I was hoping they'd make another run at a national championship this year, but Villanova was just a little too much for them, and they missed way too many shots. So, but the Final Four is going to be pretty good. I mean, it's like the heavyweights of college basketball. You got Duke playing at North Carolina first, or, well, I'm not sure what order they're going in. And then the other game is Kansas versus Villanova. I mean, just heavyweights of college basketball. So if you're a hoopster like me, you know, it's going to be a fun weekend next weekend on Saturday. But what is that popping up on my screen? Yes, I know I'm live. But like I said, it is exciting, and there's always next year. I mean, the Cougs did really good this year. I mean, they lost Marcus Sasser, their point guard. I mean, the dude could drain threes. I mean, he was killing it in the early part of the season. Then he went down with, I think, a toe injury. And then Trey Marks is his last name. He's the other guy who don't really remember a whole lot of him playing, just because it was like December when he went out. So, but anyways. As far as the weather report here, we've had a beautiful weekend. I sat outside Saturday. I did some cleaning and cleaned up my back patio because my older dog doesn't seem to know the difference between snow on concrete and snow on dirt. So had to pick up a few dog piles, if you know what I mean, after the snow finally receded on my back patio. But anyways, yeah, I sat outside, got a lot of sun. I got a little pink on my arms and legs, which felt fantastic. I probably sat out in the sun for, probably 2 or 3 hours just soaking it in. So that's, for any health advice, that, getting some good sunlight is some of the best medicine you can get. So, all right, well, let's jump in and see how the markets did today before we get into the weekly update. Dow Jones was up 0.27, closing at 34,955. S&P 500 finished up 0.71, closing at 45.75. NASDAQ up 1.31. I think they were in the green all day as far as the technology stocks. The Dow and the S&P were in the red most of the day until probably an hour or two before close. All right, let's look at the other Americas. Canada was down. Brazil was down. Mexico up almost 0.5%. Looking at Western Europe, Germany was up. UK was barely down. France and the euro were up 0.5%. What is that flag? Netherlands was down 0.5%. Spain all the way down to Belgium in the green. Let's see here. What is this? Austria was slightly down. Russian markets were down 2.15 and 0.79. Getting into the Asian markets, looks kind of mixed back and forth. Australia was up 0.08, yet New Zealand was down 2. So again, kind of a mixed market. Same thing in the Chinese markets. A little green, a little red. So across the board, it looks like it was kind of a mixed day across the investment world. So certainly not the end of the world by any stretch of the imagination, but anyways, all right. Well, let's look at the weekly economic update for this week. Week on Wall Street with growing confidence in the economy's resilience. Stocks posted another week of solid gains. The Dow rose 0.31%, while the S&P 500 advanced 1.79. NASDAQ picked up 1.98, and internationals added 0.27. So it looks like U.S. technology probably was the best for last week. Stocks extended gains. Markets bounced around all week as investors grapple with the crosswinds of rising yields, continued hostilities in Ukraine, and a hawkish comments from Fed Chair Jerome Powell. After suffering declines in 2 of the first 3 trading sessions of the week, stocks turned higher on a good jobless claims number that investors interpreted as continuing economic strength. Stocks drifted higher as the week came to a close amid rising bond yields, which on Friday saw the 10-year Treasury rise for the 13th time in 16 trading sessions. The labor market. Many economists speculated that the invasion of Ukraine would likely shape economic growth in the short term as hostilities worsened Supply chains and increased inflationary pressures. The impact so far has not been seen in the labor market. Last week's initial jobless claims fell by 28,000 to 187,000, the lowest since December of 1969. The number of people on state unemployment rolls fell to 1.35 million from 1.42 million the previous week, while open jobs are at a near record high of 11.3 million. Employers' need for workers suggests that demand for products and services has remained resilient despite the events in Eastern Europe. All right, economic data coming out this week. Tuesday, we have consumer confidence and the JOLTS report. Wednesday is the GDP and the ADP employment report. Thursday, we get jobless claims. Friday, employment situation and the ISM manufacturing index. Companies reporting earnings this week. We have on Tuesday, Micron, Lululemon, and Chewy. Wednesday is Paychex. Thursday is Walgreens Boots Alliance. All right. So that's everything there. I have a number of articles to go through. Some interesting, some not so much. First one, S&P finds strength late as Tesla leads charge higher on growth stocks. It's written by Yassine Ibrahim. Let me shrink that down. All right, the S&P 500 cut losses Monday as Tesla-led surge in growth stocks offsetting weakness in cyclical stocks amid further cues from the bond market pointing to potential recession. Consumer discretionary was pushed higher by an 8% surge in Tesla after the electric automaker said it planned to split its stock to pave way to pay dividends to shareholders. The rally in Tesla comes just days ahead of the EV automaker's update on first quarter deliveries. Quote, we believe by the end of 2022, Tesla will have the capacity run rate for overall 2 million units annually from roughly 1 million in 2021, with Berlin and Austin green lighting to start production, end quote, Wedbush said in a note. Cruise line stocks were also doing the heavy lifting, with Carnival and Norwegian Cruise Lines rising sharply even as pandemic lockdowns returned to focus after Shanghai initiated the most restrictive lockdown in 2 years following a surge in COVID-19 cases. The bond market was quick to price in the potential impact on global markets at a time when investors fear the Federal Reserve's hawkish path to curb inflation threatens to tip the economy into recession. I don't think there's a way to avoid that, but hey, these geniuses can figure it out. Let them have it. The 5-year Treasury yield briefly rose above the 30-year yield for the first time since 2006, and we know what happens when the yield curve inverts. Bad things happen. Bank stocks were sharply lower as flattening yield tightens net interest margin, limiting the ability to profit from lending. Synchrony Financial, SVB Financial, and M&T Bank Corp were down about 2%. Energy was the biggest drag on the broader market as fears that the lockdown in China could hurt demand, and fresh Ukraine-Russia peace talks cooled worries about supply disruptions weighed on oil prices. Quote, growing concerns that China's strict zero COVID policy will lead to repeated lockdowns in key business centers is unlikely to lead oil demand in China unscathed, end quote, Commerce Bank said in a note. Big tech closed higher and was helped by comeback in chip stocks, despite Goldman Sachs downgrading a trio of stocks, including Microchip Technology, Teradyne, Qorvo, amid concerns about challenging macro backdrop. Meme stocks added to recent gains, with AMC rising more than 45% after the movie theater chain touted more transformational deals are in the pipeline. GameStop closed up more than 25%. In other news, Coinbase gained nearly 8% as rumors swirled the company was eyeing a deal to acquire 2TM, the parent company of Latin America's biggest crypto brokerage, Mercado Bitcoin. So, pretty good day in the market, I guess, all things considered. So, let's see here. Next article. Oil ends down 7% on China, falls more as Russia said to drop denazification. Crude prices tumbled on Monday on China's unexpected lockdown of its Shanghai financial hub over a COVID scare and extended losses in post-settlement after the Financial Times reported that Russia was no longer demanding Ukraine be denazified in ceasefire talks. Earlier, oil markets pulled back from their lows of the day as Germany announced the possibility of cutting off crucial Russian energy imports by the year end. Financial Times said Moscow and Kiev will discuss a pause in hostilities at talks in Turkey tomorrow. A draft document does not contain three of Russia's initial core demands: denazification, demilitarization, and legal protection for Russian language in Ukraine, sources told the Financial Times. Financial Times headline was not followed up by any announcement from the Kremlin, and its authenticity could therefore not be confirmed. Russia's invasion of Ukraine itself, predicated, among other things, on the claim that Ukraine, both as a country and government, had Nazi elements in them, and Russia had to take action to denazify these. London traded Brent, the global oil benchmark, settled officially at down $8.17 or 6.8% at $112.48 a barrel. It fell to a low of 108.53 during the regular session. In post-settlement trade, Brent fell almost $11 to trade under 107 by 3:45 p.m. Eastern. New York traded U.S. crude Brent benchmark U.S. West Texas Intermediate, or WTI, settled down $7.94 or 7% at 105.96. WTI hit a low of 104.52 during the regular session. In post-settlement trade, the U.S. crude benchmark lost more than $11, trading at under 103. Oil prices tumbled after number two oil consumer China locked down Shanghai into two stages to carry out testing over an 8-day period, following a new daily record for asymptomatic Omicron infections. It was the biggest COVID-related disruption to hit Shanghai and sent prices of copper tumbling, as well as fears that any further curbs could hurt demand in China, which is also the world's second largest economy. As recently as Saturday, Shanghai's authorities denied the city would be on lockdown as it pursued more piecemeal, slicing and gritting approach to try and rein in its Omicron breakout. Crude prices, however, bounced from their lows after Germany's Chancellor Olaf Scholz said Europe's largest economy might proceed this year itself with its cut off of Russian coal and oil, despite its heavy reliance on these. All right, so yeah, that's basically it. So oil's receding a little bit, so that is a good thing. We'll see if the trend lasts or if it's just a short-term situation. Next article has to do with the budget. Top U.S. Senate Republican rejects Biden budget as inadequate on defense. U.S. Senate Republican leader Mitch McConnell rejected President Biden's $5.79 trillion budget plan on Monday, saying it was unacceptably light on defense spending at a time of heightened international tensions over Ukraine. The proposed budget for the 2023 fiscal year, which starts on October 1st, lays out Biden's administration priorities, such as a campaign promise to make the wealthy and companies pay more taxes that lawmakers on Capitol Hill will consider as they craft spending legislation. All right, well, let me stop there. We don't have a tax revenue problem. We have a spending problem. And the budget, several years ago was less than $3 trillion, and now they're double that. I mean, it's ridiculous. I mean, McConnell, that retarded turtle that he is, I mean, I want to slap the guy. The White House, or quote, the White House budget request that President Biden published today offers the clearest possible reminder that the Biden administration's far left values are fundamentally disconnected with what American families actually needed, McConnell said on the Senate floor. First and foremost, at a dangerous time, the president's budget falls woefully short on defense spending, he said. Again, when we're out dropping bombs in countries around the world, our military, it has more than enough funding to protect the homeland. Going out and dropping bombs in Syria and Somalia and Iraq and Afghanistan and wherever else we decide we need to kill somebody. I'm not in that we part. Our government decides needs to die. This has nothing to do with us. And you know what? If they want to crowdsource some sort of army to go out and do pirate things around the world, they're more than welcome to do so. Just don't do it with my cash. Biden's record peacetime national defense budget request of $813 billion boasts a 4.6 pay raise for troops and the largest research and development budget in history, as Russian aggression in Ukraine spurs demand among lawmakers for more military spending. Yeah, we don't need any. The increase is about 1.5% above inflation, the Pentagon's financial chief Mike McCord told reporters on Monday. McConnell, who previously demanded a 5% defense spending increase above inflation, said that the Biden budget could lead to an effective cutback for U.S. armed forces if inflation proved more stubborn than envisioned. Well, Mr. McConnell, you can go F yourself for all I care. So, and for those listening, I gave the middle finger to the man. So. All right, last article here, a little bit of humor, I guess. Is a recession coming? Alan Greenspan says the answer is in men's underwear. Former Federal Reserve head Alan Greenspan has a keen interest in men's underwear, not because he's preoccupied with evolving fashions of nether garments. Rather, he sees underwear sales as the key economic predictor. Sounds weird, right? But it's just one of many strange ways experts try to predict booms and busts. Quote, he once told me that the garment that's most private is male underpants because nobody sees it except people in the locker room, and who cares, end quote. Longtime NPR correspondent Robert Krulwich said of Greenspan years ago, those sales are usually stable. So on those few occasions where it dips, it means that men are so pinched that they are deciding not to replace underpants, end quotes. The men's underwear index, yes, it exists, backs up Greenspan's theory. U.S. sales of men's underwear fell significantly from 2007 to 2009 during the Great Recession, but gained steam again in 2010 as the economy recovered. Analysts are always searching for signs that might predict a downturn, just as a stampede of animals fleeing to higher ground could be an early sign of a tsunami. The same rule can be applied to the state of the economy. It's why there's been so much chatter lately about inverted yield curves or the phenomenon of short-term bond rates going higher than long-term yields. It's thought to be a sign that recession is looming, and for good reason. It's happened before each economic recession since the 1970s. But there's a number of other less technical and more fun measures of economic downturn, and they don't all involve boxers and briefs. Here's a few strange but semi-accurate ways economists track the health of the U.S. economy. Skyscraper soar. Andrew Lawrence, a director and former real estate analyst with Barclays, created the Skyscraper Index in 1999. His theory was that an increase in very tall buildings happens as we're approaching a bust, and when a building that breaks the record for world's tallest is completed, a recession or economic crisis is imminent. We took the index as far back as the late 1800s and found that even going back that distance, we could still find correlations between economic crises and the completion of the world's tallest building, end quote, he said in an interview. The Empire State Building, which was finished in 1930, just in time for the Great Depression, while the Sears Tower, now the Willis Tower, and the World Trade Center's Twin Towers opened in the early 1970s as the U.S. sunk into stagflation. In October 2009, construction company Emaar completed the exterior of Dubai's Burj Khalifa, and 2 months later, Dubai government nearly defaulted. Lawrence links these lofty ambitions to cheap credit, overinvestment, and rampant speculation, typically signs of an economic top. Today, most projects to build the highest tower are on hold, but in another way, billionaires are still spending their money to soar to the sky. Jeff Bezos, Elon Musk, and Richard Branson are all competing in the space race. Lipstick pick-me-ups. Estee Lauder chairman Leonard Lauder created the lipstick index during the economic downturn following the September 11, 2001. He noticed that the purchase of cosmetics, lipsticks in particular, tended to be inversely related to the economy because women replaced more expensive purchases with smaller pick-me-ups. In fall 2001, U.S. lipstick sales increased 11%, and back during the Great Depression, cosmetic sales increased by 25%. But the theory doesn't always hold up. Research group Klein and Company found that while lipstick sales increased during times of economic distress, they also gained during boom times. Related hypotheses abound, however, in 2020, at the height of the COVID economic downturn, Estee Lauder's CEO Fabrizio Freda said that the lipstick index had been replaced by a skincare item as consumers donned masks and worked from home. The lipstick index has been substituted with moisturizing index, said Freda, but the concept of the index is still there. Happy swiping. What's worse than losing money? Losing money and being lonely. Dating sites like Match.com enjoy a boost during busts. The company reported its strongest fourth quarter earnings in 7 years during 2009's Great Recession. In 2020, as COVID raged. The stock price surged 141% between March 2020 and March of 2021. It makes sense. Unemployed people have plenty of time to swipe around. Online dating is relatively inexpensive, and misery, as we all know, loves company. But the indicator is correct. For current times, analysts should be worried. Match competitor Bumble reported stronger than expected fourth quarter earnings this month and received an analyst upgrade, leading shares to surge by 22%. So I know I'm always saying we're headed towards something bad. Again, this is just more, I guess, what's the word I'm looking for in my head? Sucks being on live TV and not knowing what I'm going to say. Gosh, it's lost. Anyways, corroboration of, where one thing, leads to or shows that something else is going to happen. So we'll see. Again, I could be completely off, and the morons who are running our government and the Fed could drive the Titanic or steer the Titanic from, England all the way to New York Harbor and miss every iceberg along the way. I just don't think that they're trying real hard. It seems to me, from my point of view, they're trying to crash into as many as possible and lead us, into a pit of misery. But again, that's my view from up here at 7,000 feet is what I'm seeing. So, all right, well, that's everything I had for today. So if anyone needs anything from me or has any questions or comments, feel free to reach out. You can go to dsafinancialgroup.com. All my contact information is there, and I'll be back tomorrow with the Liberty Call for Tuesday. So hope everyone has a great night, and I will see you then.